people. What's good, guys? Mad love and respect. Gas, how you doing? No credits, what's good, man? Thank you, bro. Vincent. Yeah, man. My guy's saying my name, you know. Good evening, ladies and gentlemen. Wherever you are in the world, good morning, good afternoon, whatever is happening your end or your neck of the woods, as they say. Welcome to Traders Reality, guys. I hope everyone's doing well. Bitcoin hasn't gone anywhere today, as expected, as standard. Why? Because we've got some madness happening tomorrow, and tonight we're going to try and make sense of what is likely to happen. Okay? Love from Boston, Hawaii, mad days. London. What's good, London? Boomer moments in a few seconds. Correct, my friend. This is it. You're here with your bird eating cake. That's what I want to hear, man. That's what I want to hear. Okay, then. Who we got in the room tonight, man? Where are we in the world today? Who's in the room with me? I'm just waiting for my setup to roll out. We got Hawaii. Where's Cali? Greetings from Belgium. What's good? Yeah, don't forget full screen. Trust me, I'm literally got my finger on the button ready to press that full screen mode. Here we go. Canada. New Jersey. What's good? Atlanta. What's happening? Yeah, bro, listen. I'm banging on about liquidity because that's all it is. It is that simple. Follow the money. The concept is simple to say, but this is what I'm trying to deliver in the streams, bro. So bear with me, man. Bear with me. You'll understand it. I've got the pattern watchers, man. They get it. And anyone new that has come through to the channel and is literally torn between the idea of what to actually take from this, just listen to what I'm saying and how I deliver the idea behind the market maker aiming for liquidity. Because at the end of the day, that's all they care about. They provide the money. At the same time, they need to take it back. All right? So we'll be doing that. You know? Will they go for the liquidity? That's what it is. Poland, what's good? Oslo, what's happening? Africa, it's the first time I've seen Africa in here. Leicester, you know. What's going on, Trevor? Sunderland as well. All right then, cool, wicked. All right then, ladies and gentlemen, welcome to Traders Reality. If you are new to the channel, before you hit that subscribe button, sit tight and observe the chaos of the markets, and then hopefully by the time that I'm done, you'll have a good understanding of what to expect from this game that we call trading. All right, so let's roll with the flavor, guys. Let's flip over to the live screen. I've got Alexa talking in the background. She can hear me for some reason. I don't understand. Please be quiet, Alexa, man. All right then, cool. Let's roll with it. So, ladies and gentlemen, from today's stream, in the New York session, we saw a little bit of excitement. Yeah? Traders made a rush to the charts today because everyone's talking, well, people's sentiment is changing ever so quickly. That's why I keep banging on about people saying Bitcoin 1 minute is going to go to an explosive move to the upside. Next minute, we're in a confirmed bear market. It's all chaos. People can't make up their mind, which is why price is staying in the range that it's currently in, because it's making people who are impatient and don't understand the game itself just to commit liquidity in the chart. All right. If you don't know what to do, you're just going to hit and hope that what you do in terms of your decision to make a trade, whether it's to the upside or to the downside, you will search for the narrative across social media. You'll speak to your friends. Where do you think Bitcoin's going to go, bro? Oh, man, I think it's going to go up. You know, it's always got to go up, man. They can't allow it to go down because they can't make it too cheap. Whatever, bro. It's irrelevant. Yeah. This is a business model, and the sooner you understand that, the easier it's going to be for you to understand what they're likely to do next. Now, guys, the next 23 hours, okay, no, 20 hours even, is going to be really important for the markets across the board. Everyone's got this idea that Bitcoin's dropping because of the equities markets. You've got everyone thinking that Bitcoin now has a disparity with the equities. Is Bitcoin meant to be a hedge? You know, these ideas that are being thrown about is just people, in my opinion, fundamentalists who want things to happen in the future and they are waiting for that narrative to play out. And if it doesn't, they'll just blame it on something else. Okay? But in this stream, we're going to focus on understanding what moves price. And it's simple. It is. It's just money. Because like every single one of you people that come to the charts every single day, you anticipate to buy when price is from this zone and you anticipate to sell it when it gets to a higher point. Or if you're going short, you anticipate to buy it back at a lower point as well. All right, that's all it is. And trading is not, you know, the math behind trading is this. It's either going to go up or down. Okay. But the true math of trading is how much money are you prepared to risk whilst it's trying to find its journey to your desired direction. So if you want price to go up, what if it decides to do all this chaotic movement before it actually does decide to go in that direction? If you look at the chart itself, you can see that we have got this big red vector candle zone. All right. Now, this is a point in the chart which we understand the market maker has built longs at lower prices. He's only able to do this if he's able to attack previous zones of liquidity where people had previously gone long. Okay? Now, guys, please reduce the brightness on your phones or on your computers because I'm going to bring you a screen right now which is pretty bright. The company that's actually behind this is actually looking at sorting things out and updating everything, so it won't be a problem for a long time. But just reduce the brightness on your screen. I'm going to change it over right now. Okay. So we need to understand the basis of what's going on here. All right. This is the result of liquidity coming into the markets after it's happened. All right. This chart right here is currently the chart that shows where the money is at in Bitcoin, especially Binance right now. When I say in relation to the title of this video, will they go for the liquidity? You notice that there is not really, the best way for me to put it to you is the following, okay? Below you can see the red. Now this implies that there's over $14 billion worth of short liquidation points, which is demonstrated by the blue area above. This is where all the shorts are, okay? So people that have been going short, their liquidation points are visible, okay? Now you can see to the downside, we have got guys who have gone long, their liquidations are below. Now, if you've been watching the stream for the past week, okay, you would have noticed that the longs haven't really been present. There's not been many longs in the chart, okay? All the screenshots that I've been sharing have shown that the longs they've been lacking. So it's mainly people going short. It was only in the last 48 hours when we've seen movement to the upside where the long liquidations are present. The question that we've got to ask ourselves, what is it or what's the chance of price actually going down into this range right here with the liquidations for the longs? Or are they going to make an attempt to hit the upside when the liquidation points for the shorts are much more? All right. So if I increase this chart right here, guys, you're going to see how many shorts there are collectively in the range between the 42k zone, okay, and all the way down towards the 32. So in a 10k range, this is where the liquidity is at. And you can see something pretty interesting. The shorts, all right, start to reduce. Yeah? The shorts are reducing. Does that mean traders are now stopping from going short? Or does that mean the market maker now is in essence aware that retail traders who are short are currently in good profit, and if he stays and brings price down lower, they will either commit their positions, keep them committed in their trades, and then make a surprise move to the upside and hit their liquidation points. You see, the more shorts that are present in the chart, okay, the longer people's liquidity is trapped in the charts for. So we're trying to work out at what point will the market maker keep the shorts trapped and go back to that liquidity later on? Or will he make a run towards the long liquidations to take this last bit of liquidity to get more people to commit short? Okay, because over here in this range, before this move to the upside, there was about $6 billion worth of shorts. Now in this area right here, there's only 1.4 billion. All right. Now, we're not seeing any delta that is skewed towards long liquidations. So it still stands. There are more shorts than there are longs. Okay? When you dive closer into this chart, you can see what's going on. Look what's happened here. You've got longs open, $49 million worth of longs opened at the highest point in the price. All right? That's crazy. And then you've got another slot right here, $47 million worth of longs opened. Now, this is just to the visible range. There's more longs being opened all over the place. Look at these guys over here. opening longs at the highest point in the chart, because that's what they say to you. You buy when price is rising. That just doesn't fit in my mind. It doesn't make sense to pay for something as it's increasing. It doesn't make sense. Oh, is it because you believe that it's going to continue higher because it's rising? No. And this is where the idea of the psychology of trading comes into play. Why is it that they keep spiking the highs and then they come back down? Because these are runs for liquidity. Okay? Now, what are we expecting Bitcoin to do? Given the fact that we've got the FOMC announcement coming tomorrow, okay? It's been a pretty boring day in the markets, in my opinion, okay? Bitcoin makes a new move to the upside, and we've anticipated this move back to the 50 EMA because we are waiting for what looks like the development of a W formation. Now, this is just a structure in price. It's not going to follow it to the T. Okay, so don't make the mistake of thinking that W formations are static. They're not. So what I'm trying to say is this. This pullback right now could be the start of the second leg to the downside for a W formation, which would mean that they may likely come back down towards this zone right here. Now, this is a blue vector candle. We understand that price always ends up coming back to these points because these are what we call the imbalances in the chart. At the same time, what is made up of this candle, which will then take us back towards that bright screen again. Check your brightness. Watch out. That zone, okay, between the 36,043 and the 34,220 is made up in this zone right here. All right? So look at all the liquidity. So on the assumed liquidity or liquidation points for longs, we can see the following. There is roughly 47 million at 36. 49 million at 35,985. We go further down. There's 62, 60, 68. We've got 43.7, 43.46, 43.71. All right. Now, the crazy thing is that the liquidation points for the longs in this area right here are the margin traders who are trading 25x. So they're putting up more money to open a position. Okay. They're not interested in 100x traders or 125x traders. Those are the traders that are putting less money with more leverage. Okay? These guys are using less leverage and their liability up front is more. So if they can tap those liquidation points, the market maker's earning more money. Okay? That's the narrative of understanding the liquidation points. Why is it important to know what kind of liquidations are we looking for? Okay? Are we looking for cheap liquidations or expensive liquidations, aka 25x? All right. Now, what can we understand with price right now? We are expecting them to pull price back down here. The narrative across the board is Bitcoin's going to go down to 20k. Let's understand if that is the case. Let's have a look at the book map. Okay. Check this out. The book map itself, all right, they've come down and worked the 36 range. Now, there's not that much liquidity up here, but as you can see, there is a ton of liquidity, and this last night has reduced. All right, so stay with me on this. Stay with me here. In last night's stream, guys, all right, there was 1,495 there or thereabouts Bitcoin orders at 30k. There's now 1,397. What does that mean? Well, it means that they've taken orders out of the market. Now, does that mean that they've completely stepped away? Maybe, maybe not. What it could also mean is that they've moved the orders up so that they can get filled sooner because they may think that the interest may come in at 32. Because at 32,000, there's 587 Bitcoin orders. And you go lower at 31, there's 321. Above that, 154. So in this whole range right here, there's roughly about 3,000 Bitcoin to be taken. I ain't even going to mention the 29k zone because there's roughly about 1,000 there as well. All right. But does that mean Bitcoin's going to go in that direction? Now, what we've got to understand is if this area right here, it stays red in the chart, that would mean that that is liquidity that is stuck. And when I say stuck, it means that they ain't getting rid of it, ideally, until price shows the interest to come back towards it. Because if it starts moving all the way up towards the 50s and the 60s, they're probably going to remove this liquidity and then try and fill it up at a higher price point. When we zoom out to look at where the orders are, it's crazy. There is 127,425 Bitcoin orders at zero. How funny is that? This is a coin that people are expecting to go to 100K. All right. Now, listen, I am a great advocate for Bitcoin to go higher, but not from 36, not from 50, not from 60. Let's get to 80 and we can then look at the 100K zone. All right. Even 98. Then I'll consider the 100K. But you get what I'm saying. In my opinion, I'm not particularly fussed with the idea of price, which is what this stream is about. It's about helping you take advantage of momentum, okay? Now, in terms of momentum itself, we've established the liquidity and where it's currently at. What can we use to help us understand if they're going to take that liquidity? Well, the tools that we have in front of us, guys, they are free of charge for you. You can download them. Just make your way over to the website. It's pinned to the top of the chat. And just go to the Traders Reality website. Scroll down. You can join the Discord. It's free. Obviously, subscribe to the channel and go to the downloads and tools. Click here and it will take you to TradingView where you need to favorite the indicator and then you can upload it onto your charts. Happy days. And there are a few more indicators right here which make up the chart. You've got the book map, the PVSRA volume, vector candles, psychological levels, and TDI. Happy days. Okay, it's free to do, and then come back to the stream so you can see it being used in real time to help you understand it. All right, pucker job. Okay then, here we go. So what can we use to understand if Bitcoin's going to go in one direction against the next? Well, firstly, we need to understand what's close by. We know there are liquidation points in the zone that they could take. The next liquidation zone itself is currently at 36,061, where $47 million worth of liquidations of longs at 25x. Okay, so let's work out if that is the case. Mark off in the chart. What's next for that zone? So 36,042, there or thereabouts, in this range right here. What zone does that take? It takes the previous vector candle and the wick as well. You notice they always have a habit of coming back to the wicks. Yeah? Look at this. There's a wick up there. They came today, spiked the wick, hit yesterday's high, and pulled back. All right? Now we're coming back down below the daily open. We're coming towards the 50 EMA. If the momentum is going to continue to the downside, the 5 and 13 EMA will cross over the 50. So this move today, guys, hasn't been great. Okay? Look at my guy pulling off a smiley face. As if I just did that. Anyways. Here we go. We've got something here. The Joker. The IRS in Washington, and they are going after all crypto coin holders with the help from the Pentagon. You have been warned. This is the act of under President Joe Biden's orders as of the 1st of January, 20th of January, 2022. Wonderful. At least the IRS is endorsing the idea of crypto. You know, that's acceptance in my eyes. Going after the people that have it. Happy days. They'll under what they want to understand. I'm not even going to get into it anyway. Price action. Here we go. There's your boomer moment, guys. There's your boomer moment right there. Tino, if the shorts close position, are they still shown in the high block? Could it be missing data for us? Listen, all right. Check this out. It is the assumed potential liquidation points. They obviously use an API from Binance, okay? And it shows the order flow of what's available nearby. There are always liquidation points being hit. If you notice carefully in the book map, can you see this order here? The current order book is aggregate. Okay, you see how often it's changing price. Remember, liquidation points are still orders, guys. Okay, they are still orders in the marketplace because when you're in a short and you get your liquidation hit, what has to happen? An order has to be activated. For the order to cancel out the existing trade, a buy order is initiated when you set a stop or a liquidation point is hit on your short. Okay? And that's what is happening continuously. Okay? Tino, check the 5K wick in Bitcoin USDT Bitstamp 9W time 9 week time frame. 9 weeks, bro. That's going to take me a little while to get sorted out. I'm not that affluent on... Well, I am, but it's just going to... Right, let me have a look. The wick, the 5K wick on Bitstamp. Let's just have a look at that. I mean, you've got to understand as well. On Bitstamp, here we go. The 9K... Are you talking about this one? Are you talking about this wick? I'm guessing that's the wick. 38 all the way from 33. Yeah. Okay, yeah, so... Well, look at that. it's self-explanatory, talking about the previous wicks. They've come back and recovered it. Now, they may leave a little bit of money on the side right here, because if we look here, okay, between the 38,036 zone and the last time it got hit was the 37,571. Let's go over to the high block and pull up Bybit. No, BitMEX won't let me do it, actually. He won't do it. But all we need to do is look up in that zone. Are there liquidation points? Most likely, okay? How much is the key question? Because the bigger concentration of short liquidations is 63 million at 37,561. Okay, so 37,561 will take us right there. Literally on the nose of those two wicks. It's not coincidence. It's because this is the nature of the game. It's all about hunting for liquidity. Okay? So, going back to Binance itself. All right? What do we need to see for Bitcoin to drop lower? Well, ladies and gentlemen, frankly, Bitcoin may either do one of the two things. May come down towards this previous wick right here, okay? May even come and test the psychological high. However, it's done a very good job of holding that range. This would be the first attempt. This would be the second. Will this zone be the third? Okay? Now, because we've got the FOMC release coming out tomorrow, price action may be exactly the same as today, just spiky behavior, which is why I am warning you, please, do not be involved in trades during that time, because the market is very treacherous. It can be a good thing or a bad thing, whatever the news is, but just wait, because before they spike price higher, they may spike it down lower to hit all traders' orders and then reverse it back up. But then you'll say, Tino, you told me to not trade and I've missed out on a potential opportunity to earn 50x on my account. Well, that's a lie, because you wouldn't even be getting involved in the trade in the first place, would you? If you saw this happening to the downside. You can't say that you'd be missing out on anything just because it reverses back up. If this is the case tomorrow, ladies and gentlemen, wait at least 30 to 40 minutes after the news has been released. It's likely to try and retrace back down. And then if it's true that they are favoring higher prices from the positive information, then you will see price move to the upside, because the chaotic move that might happen tomorrow is going to move price above or below the moving averages. So there will be a reversion that needs to happen, because it's an explosive move. Now, tomorrow, it might not even happen. They might even just stall it. They might even see information. They might say something tomorrow that's exactly the same thing. And that's exactly what the FOMC can do. And they've done it many a times. They've said things in the past that traders anticipated them to say, yet price didn't do anything. You know? Which is why you need to check out the stocks. Okay, look at the SPX. Today, S&P 500. It's not really done much. They come back up and recovered the previous green vector candle right here, which is a little bit of a bizarre thing, in my opinion. But that's because they closed the gap right here. There's no green vector candle that gets recovered to the upside. That's just wild. Okay? But they're all waiting for the news release tomorrow, which is why today, you may see, if you're trading in the Asian session, Asia might mark price up a little bit for Bitcoin, try and take it up a little bit higher or lower. It all depends on where they're going to run for liquidity. Okay? Tino, is it wise to use 500x leverage in playing Forex with your strategy? Also, what do you think about using outside funds like FTMO? Okay, then. So, leverage in Forex is, the principle's the same. However, it's different to crypto, okay? You still put up margin, all right? But Forex uses lots. It's lot sizes. So every one standard lot is like 100,000 contracts, okay? But in crypto, you're using the value, okay? You're effectively leveraging value, okay? So if you do get a big drop in price, or even like a 5% drop in Bitcoin, for example, your 100x or 125x, all right, your $2,000, for example, is going to get wiped out straight away. Okay, if it goes against you in a small percentage. So you've got to be really careful with crypto leverage. In Forex, the principle's the same, but the mechanics are a little bit different. All right, you do use margin. I mean, on certain trades that I take, if I'm doing swing trades, I won't use leverage. I'll only use a 1-to-1 on my account. Still leverage, but it's only 1-to-1. And if I'm scalping, then I'm using 500x. That's what I'm using for scalps, because I can just commit a small amount of money up front and the returns are much greater, but I only want quick returns in short trade windows as a scalper. I'm not interested in leaving my liquidity in the chart for the market maker to play tennis with my liquidity. Forget that. I want to get in and out, done. I then get another opportunity to do exactly the same thing. Scalping by principle is you're cutting. Yeah, you're cutting into the market. All right? You can either go for the big slice and wait a few days, weeks, but look how many trades you can achieve when you scalp. That one trade for the swing trader, what the swing trader earns in 3 days, we could earn as scalpers in half an hour. Yeah? Because you're getting in and out continuously. That's the beauty of scalping. But it's a different discipline. Completely different discipline. Okay? All right then. A couple of more questions. What have we got here? Forget about Bitcoin and make sure to check them. Oh yeah, we'll leave that. Tina, would it be a decent idea to layer a few longs starting from 34 to 28k range? That, my friend, is bottom fishing. Okay? Now, it's all down to how much risk you are prepared to put up to sit through the idea that the market has bottomed now. Yeah? The narrative across the board is showing that there's a lot of liquidity of longs in the zone. See, if they are trapping longs and making them believe that this is the bottom, then there's a good chance that they're probably going to come back down to the charts and hit the range. You see, there's a chart. Where is it? The 5-hour chart. Look at that big green vector candle. Price has made a big move to the upside, all right? And it's stalling in this range. Why is it stalling? You know? It's making you think, hold on a sec, are they actually preparing to drop? Because we know that the green vectors are points in the chart which they're going to be coming back towards. Now, price could actually extend up. As you can see to the left, they've come back and recovered the majority of the vector candle zone. They've hit those liquidations. Now they could be starting on the second leg down towards the downside for the W formation. This sharp move up does not confirm the reversal of the market. There's still money for them to grab, and this is what we're trying to see. If price is going to confirm a move to the upside and Bitcoin's going to trade higher, in my opinion, Bitcoin will need to get back up above 43k, even 44k, and even then at that point, Bitcoin would need to come up, retrace back towards it, test it, and continue higher up before we can even solidify that we're in a markup phase. All right? It's just moved too soon to the upside because, as I said before, people are getting impatient. And what they've got to do right now is speak about the bottom enough so that they can induce people to commit more liquidity, increase the amount of long liquidations, okay? And then attack the range and surprise everybody. So in my opinion, I'm waiting for Bitcoin to form the following. I'm waiting for this pattern to play out. Because if this pattern plays out, it factors the following. It tells me that if it can go higher, all right, and they're going to trap traders higher and get more long liquidation points, they'll come up towards the 50 EMA. If they hold at that point, they'll bring it back down again. And if they can hold in this range right here, so if they can hold at least in the range of the previous peak right there, then that would imply to me that they're getting ready to come away from this range because they've done the business, and you would see vector candles appearing in this zone, which is what we would understand as the shifting out of the range. Okay? Remember, this game is all about how much liquidity they can trap from one end of the chart to the next. Because when they've trapped one aspect of liquidity, they're going to come back down towards those pools of liquidity so that they can run the same trap again in the opposite direction. Because when people are going short, market makers going long, and those who are going short are adding liquidation points in the chart. So the market maker, in essence, knows where to send price in the sense of where liquidity is at, so that when he brings price back up, who's going to be the person that actually buys back the order of the retail trader who went short? Because his short liquidation is a buy to cover in terms of a market order, a limit order. When you go short, someone has to buy it back, and that's the market maker, because he can see that you've got those orders there. So he will send price all the way back up because he knows he can get filled on his longs that he went to the downside, and all the shorts that have been taken out. He's hitting those liquidity and offsetting his longs profits all the way back up. And guess what? Whilst he's moving price up, he's building his shorts again at the same time, which is why price action always does this. You get a little bit of a pump, and then it does this, and then you get another pump. That is the basis of how they move price. Your concern is not why. Well, we know why, because it's money. Your concern is not really how and who. Okay, the market maker's a liquidity provider. He's no one that's strange. There's nothing wrong with it. He provides liquidity to the exchanges across the board. All right? He's not a mysterious person. They just provide liquidity for the exchanges. Are we cool with that? Are we cool with that? Do you favor the 5-hour chart like now or the daily for the bulk of your analysis? Okay, so this is how I see it. I don't care about a specific time frame that's going to make or break my analysis. I look across the board. I have a look. I want to look at it an overview. I'm looking for liquidity. I'm not interested in anything else other than where's the liquidity at. If I can see liquidity in one range, I will zoom out. And then I'll say to myself, well, where are we in the cycle? Why is there so much liquidity in this area right here? Okay. The book map itself is a real-time analysis of what liquidity is doing in real time. Okay. So that helps me understand the chances of them sending price from one point to the next. If I zoom in, you can see where the liquidity is coming in. You see there's a bag of orders up here, 131 Bitcoin up there. What's the chance of them sending price up there? What about down here at 36,500? Could there be a chance of them sending it down there? So I'm always having this conversation based on the real time of the book map. Okay. But more importantly, when I see the charts themselves, I'll look at the daily time frame and I'll say, okay, where do we stand in respects of the actual cycle of the the daily time frame? So we've come back down to the same point that we were at not so long ago. And that was the same point that they moved away from. Quite frankly, ladies and gentlemen, they do respect the green vector candles. And we've also got another green vector zone down here, which is the 30 zone, which you were talking about, bro. Okay, the guy talking about filling his lungs in this certain area. So the idea is to try and understand the relationship, or should I say the development of the candlestick itself on specific time frames, which is going to help you understand what they're likely to do. Every single day that price has been trading, it's hit its range daily low. There is a push to mark price down lower. If you don't think Bitcoin can go lower, then you might be in for a bit of a surprise. It doesn't matter what they did in September. See, a couple of weeks ago or so, everyone was talking about across social media saying that this was the September 21 zone where they bounced away from. Everyone was going long in this range. Not in this channel. We were not going long. Okay? But they were using the past because they thought, yeah, that's where it's going to turn. Wrong. Okay? Now we're coming down to this point. People are feeling exactly the same way. How do we know that they're going to turn from this point? All we know that this is the last time that they turned from. And the question you want to ask yourself is this. Will there be enough interest by traders at this point, or will they come back down below to really test if the intention is there for them to move? Because they moved away from this point. So in my opinion, there's no interest in this zone because they hit it before. All right? But if they go lower, then this interest is going to pop its head up and say, hold on a sec, we can't really allow this area to go down that much. Or the traders who want to try and support the move of Bitcoin, that is institutional traders, whales and what have you. You see, for the market maker, he doesn't care about your opinion of where you think Bitcoin's going to turn. He cares about if you're going to buy at this point or sell at this point. So what does he do to encourage that? Fibonacci's, flag plays, pennants, Toblerones, you name it. Okay? These are all the strategies that traders use every single day to give themselves a reasoning to believe that price is going to go from one point to the next. Okay? Because what they'll do is they'll draw off a pattern, for example. They'll do a flag thing. All right? They'll go on replay and they'll put it up here. And then they'll say, will it work? And they'll test it out over time. And they'll find that it works in their favor. Happy days. I think that's just madness in my opinion. I mean, I've been trading a long time to understand that they're not really high probability trade setups. They're great if you want to maintain like a 35-40% win rate. Even then, if your risk is, if your risk is really good, then you can still be deemed as a profitable trader with the 40% win rate. So we're going into other things. But what I'm trying to say to you guys, the business model is not based on these indicators that are so accessible to everybody today. The only indicator you guys need is this big thing right here called a candlestick, because that is the result of what the market has done. And that's all you need to care about. The price is irrelevant. All we need to care about is what it does at price. And what we're working out right now is, are they building longs or are they building shorts in this range because it's stalled? Okay? Forgive me for chewing your ear off on Bitcoin, but I feel as though it's necessary that I explain this for you because everything right now is running on Bitcoin. Okay? And when I'm looking at the charts, like in answer to your question, bro, the 5-hour chart, if I break it down, I look for liquidity so I can see, look, there's red vector candles to the downside. There's pressure to move it down. And as I drop down the time frames, the 12-hour chart, I can see there's a bag of liquidity right there. 2 rejections in the 13 EMA on the 12-hour chart. What is that saying to me? Is it saying that they could potentially bring it back down? Or are they holding price in this range to effectively bring it back up again to take some of the liquidity up here? In other words, back to the title. Will they go for the liquidity? Will they go to the upside or to the downside? Sorry if I've just blindsided you there, guys. Okay. 10-hour chart, green vector. So I can see that there was a lot of exchange in that zone. 9-hour chart, and you can see the list goes on. That's a stopping volume candle, so that changes things. But that's naturally going to happen as you go down the lower time frames, because a 17-hour chart is going to take precedence over a 9-hour chart because it's more data and more time. Okay? Are we cool with that, ladies and gentlemen? Are we good with that? Tino, so the market maker doesn't care about price, he only cares about the liquidity. Owen, you need to ask yourself, why would you buy Bitcoin at 36? Why would you buy it at 30? Why would you buy it at 28? He's got to do something to get you to do that. So look at the apps you got on your phone, all right? Whether it's crypto.com, Coinbase, they're going to send you a notification saying that Bitcoin is up 2% or Bitcoin is down 2%. Those notifications are designed to make you do something. You either react to it and go and buy some Bitcoin when it's rising, or you react to it again and sell Bitcoin whilst it's dropping. Because a lot of people have those indicators on their phones or notifications to let them know about their current positions. All right? Now imagine that's happening across the board with all these companies. And people are making active decisions, which is why you see the liquidation chart again. With all of that liquidity, there's money all over the place. The market maker does not care about the price. He is only caring about what you do with your liquidity at certain prices. And then what he does is he manipulates price in such a way that makes you believe Bitcoin's going to go higher because you see these big bullish, bullish candlesticks, because that's what they say. Look, I bet when these bullish candlesticks came into the chart, everyone was running to the charts to try and buy Bitcoin because the bottom has been found. Well, the market maker works in threes, and if you've been watching the previous streams, you'll understand what I'm talking about. 1, 2, 3 hits to the high. Just ask yourself, why is it every time it makes a move to the upside, it always comes back down? Because they've trapped the liquidity. Remember, the market maker's building his shorts, and that's why they reverse it back down again. You know? That's how it is. Ryan, didn't take a single trade today, as one does in the Pattern Watchers family. Project and train the eyes. Then came FTD play on Ethereum. Then I scalped and held back to the 200 EMA in the 15-minute. Happy days. Well done, bro. You know? That's how it is. Great question. Who has the best fries, Wendy's or Five Guys? Put out your comments, guys. Who has the best fries, Wendy's or Five Guys? That's a funny question in the stream. What a question. All right, and guys, let's roll with it. Let's have a look at some altcoins. Let's have a look at some altcoins and see what chaos is going on there from today's New York session. Here we go. All right, if you want this watch list, guys, make sure you join the Discord. It's free to join, okay? And you can just check in the Discord and just type in altcoin boss watch list, and you can actually download it, and it doesn't cost you a penny again. All right, but you've got to join the Discord to do that. Here we go. What we got? Five Guys. Well, you're given 2 options, bro. Five Guys or Wendy's. Why are you rolling with McDonald's, bro? Don't make sense. What have I done? What's going on? No. 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 I can't believe it. Nah. I don't believe what's just happened. Ladies and gentlemen, we've got a problem. I've just broke my inhaler. What a guy. What an absolute clown. There you go, ladies and gentlemen. That is your boomer moment for this evening. Back to the price action. So, the altcoins. Who's been the top winner today? 20% gain to the upside. Loopring. What did we say yesterday in the stream about Loopring, guys? Okay. Loopring was showing some good stability, good movement. All right. And they came above the 50 EMA. It was one of the coins that was trying to come above the 50 EMA yesterday when we were looking at the total market cap chart itself. Okay. Last night, in the stream, we were talking about, not last night, yeah, it was in the stream on Sunday. That was it. The stream on Sunday, the altcoin marketplace was trying to come above the 50 EMA. All right. And they came back and we were looking for altcoins that were showing that behavior to the upside. All right. So you can see what's happened now. Now they're trading above to the upside. And this is what you're looking for. You can see that altcoins have moved up. They've now retraced to test the range, and now we are anticipating a move to the upside if the altcoins are going to do what they do best, okay? Now, your job is to try and go through the altcoins and find the ones that have shown the support already and are coming away from the 50 EMA. So let's just quickly scour the charts and see what's happened. Here we go. Here's a perfect example of it. Price comes up, retrace to the 50, rejection of the psychological high, up it goes. Happy days. What we got? Ren's trading nicely again. Not really that much of a retrace back down to the 50. All right, so fair and square. Ren has shown a nice slow trend, true trend movement to the upside, but be cautious. Range daily high is in sight, so they may, obviously, which they've done, they've pulled back from that range. So tonight's session will determine if they're going to follow through and continue up a little bit more. All right, we got Elrond, I can't even say it. They've done 2 retraces. They've come up, hit the 50, bounced from the psychological high, and now they've come away from it. Now they're retracing again, looking to try and come towards the range daily high. They may not make it because a new session's going to start, all right? But keep an eye out on this price target of 146. If the strength is present, they will be ideally coming towards this point in the chart, okay? Because in the next session, the range daily high is going to be much higher, okay? There you go. Romeo, what's happening, bro? Okay, AVAX. Again, look at this. Consolidation around the 50 EMA. These are the money trades. We look for this pattern every single day, guys. Rise, retrace, continuation to the upside. It's made up of 2 entries. All right. You've got the entry right here, which is more of a conservative trade. And this one right here is more of an advanced trade. Okay, so you're taking a little bit more of a risk in here because it could falter and drop down. All right. But look what happened here. The rise to the upside, they consolidate. What point do you decide to make the break and place the trade? You can either place the trade on holding this range right here, or you can place the trade as soon as they break the previous high in that zone. Rise, retrace, continuation up. That's all you're looking for when you're trying to take a bit of money out of this game we call trading. Okay? What are you guys asking me to look at? Let's have a look. FTM, here we go. Let's have a look at Phantom. Where's she at? $2.30. Nice movement. There you go. A little bit of a projection from yesterday of this articulate work. Perfect. All right, then. So, look. FTM yesterday got stuck at its 800 and 200 EMA. All right. It's done pretty well to... Not yesterday. From last night's stream. Sunday nights. It's done really well to hold this range, man. It has done very well. Now, you want to focus on the coins that are actually holding above the 50. That's all I'm saying to you. Just focus on the coins holding above the 50. The ones that are trading at the 800 and the 200, the moment they break away from that zone, let's make the assumption that they go from this point here, retrace, and then make the move higher. You want them to clear as much of this zone as possible right here, okay? But if they're going to do that, but they don't actually make it with conviction, expect a retrace the moment they come away from this range of the 800 and the 200. You want to see a clean break up and then a retrace back down towards it, as opposed to what it's done right now, where price action has tapped above it and pulls completely away from it. See, at this point right now, you'd be saying to yourself, well, is it likely to continue higher? Because it's had the opportunity to trail further ground, but it's found the resistance at the 200 and the 800. So now we need to wait. We need to wait and see if this is going to play out. Do you understand? Because what they could do, because they found resistance at this point, price by principle will be coming up again. That means they could be actually hitting the 800 and the 200 EMA again, and they could also falter at this point, and then they could break back down. They know, the market knows that we scour for these patterns, whether they are Fibonacci plays, box range plays, candle, pennant flags, whatever. Double bottoms, double tops, triple bottoms, triple tops. They know how to work it because they know traders are committing liquidity in that behavior. All right? Cool. Final one. Let's have a look at Solana. Solana, man, she just doesn't do much, man, but she's holding the range. She's still in her psychological ranges right now. Okay? So that's what's really important. It's if the coins that are holding during this chaos, okay, keep an eye out on them. All right? Because it's not, don't make the mistake of thinking that, oh my God, Solana, man, it was $100, $200 before. Will we get back to that point? They may never get back to that point. That's what you have to have in your mind. But the only way that they can come back to that point in the chart is if they do a good job of coming away from the current zone that they're at. What's going on with this? Wait there. Wait there. It's all over the place now, isn't it? That is crazy. Here we go. The only way that it can come back up to a previous point in the chart where your expectations of the coin itself were really high, they need to start coming away from this point. Don't look at a coin and say, oh, it was 200 and now it's 93. Okay, it's going to go back towards it. You need to see the proof of that because they could come all the way up to 180 and then pull it all the way back down again. Because imagine how many people are doing that and having that sort of mindset, which is why people will bottom fish. Okay? Ladies and gentlemen, I want to thank every single one of you people for passing through, okay? Be sure to watch tomorrow's stream at 2 p.m. We're going to be catching some news plays tomorrow in the marketplace, so be sure to join 2 p.m. GMT so that we can observe the chaos unfolding, and I will catch up with every single one of you beautiful people tomorrow. Thank you, and God bless every one of you for passing through. Take care of yourselves. Peace.